You've probably heard of Michael Saylor, right? The CEO of MicroStrategy. He is famous for making some incredibly bold, some might even say wild predictions about where Bitcoin's price is headed. But these aren't just numbers he's throwing out there. They have huge implications for his company and, of course, its investors. So today, we're going to unpack what his predictions could actually mean for MicroStrategy's stock price.
And look, he is not shy about this stuff. He has some shorter-term targets, sure, but Saylor has actually put this number out there, $20 million for a single Bitcoin. I know it's an absolutely extreme scenario, but it really sets the stage for the kind of conviction we're talking about here.
And yeah, that brings us to the big question, doesn't it? If Bitcoin's price goes anywhere near what he's talking about, what does that imply for the stock price of his company, MicroStrategy? That's exactly what we're going to figure out.
Okay, so first things first, we gotta understand the fundamental link here. How does a cryptocurrency get so tangled up with a publicly traded software company? Why does Bitcoin's price matter so much to MicroStrategy's stock, MSTR? Well, it all comes down to a really unique corporate strategy. A few years ago, MicroStrategy was sitting on a huge pile of cash that was just losing value to inflation. So they started converting those reserves into Bitcoin, believing it was a much better place to store value for the long haul. And today, the company's value is just overwhelmingly tied to its gigantic crypto holdings.
So, how in the world can we translate a Bitcoin price into an implied stock price for MSTR? Well, we can use a pretty straightforward model, one that a lot of analysts use, just to get a basic feel for the valuation.
It's this thing called the Bitcoin-derived net asset value, or NAV for short. Now that sounds a little technical, but the idea is actually super simple. You just take the total value of all their Bitcoin, you subtract the debt the company has, and then you divide that final number by how many shares are out there. That's it.
So let's walk through it. It's a simple three-step process. Step 1, multiply the number of Bitcoin they hold by whatever price we're targeting. Step 2, subtract their net debt, which is sitting around $8.12 billion. And step 3, divide that result by the number of shares. That's the whole calculation.
All right, so to do this right, we're going to run two different scenarios. On the left, we have our base case, which uses the most up-to-date numbers for their Bitcoin holdings and shares. And then, just for comparison, we have a conservative case on the right, which uses slightly older, smaller figures. This just helps us see how sensitive the final number is to these inputs, because they're always changing. The company's debt, though, will keep that the same for both. Okay, the stage is set. We've got our model, we've got our numbers. Now for the fun part. Let's start plugging in Michael Saylor's Bitcoin price targets and see what the math spits out.
Well, let's start with his near-term target. This is a price he's suggested could even be reached by the end of the year, $150,000 per Bitcoin.
So you plug that in, and what do we get? At that price, our model implies a MicroStrategy share price of about $326 in the base case and $303 in the conservative case. So, in this scenario, we're looking at a stock price somewhere in the low 300s.
Okay, let's ramp it up. Now for the medium-term target, which Saylor sees happening in the next 4 to 8 years, $1 million per Bitcoin. And wow, this is where you really start to see the power of leverage kick in. Remember, they use debt to buy more Bitcoin, which amplifies the potential returns. At $1 million a coin, the implied share price just skyrockets to over $2,000, specifically $2,338 in our base case, and still a massive $2,183 in our conservative calculation. And now for the big one, the one that gets all the headlines, the 20-year outlook, $20 million per Bitcoin. Okay, the numbers here they get kind of crazy, honestly. If Bitcoin ever actually reached this target, our simple NAV model implies a MicroStrategy share price of over $47,000. Even the more conservative case lands above $44,000 a share. It's just staggering. So when you lay all three targets out like this, side by side, it really drives the point home. You can just see this dramatic, almost exponential relationship between Bitcoin's price and what it could mean for MicroStrategy's valuation, at least according to this basic model. Now hold on, before anyone gets any crazy ideas based on those numbers, we need to take a big step back and have a serious reality check. This model is great for understanding how the gears turn, but it leaves out a lot of really important details. And this is probably the most important thing to get. The NAV price we calculated, that is not a prediction of the actual stock price. Our number is a clean mathematical value. The real price you see on your trading screen is messy. It's driven by supply and demand, and investor feelings, and news headlines. In fact, MSTR has historically traded at both huge premiums and huge discounts to its NAV.
And, our simple model has some other big blind spots. For one, it gives zero value to MicroStrategy's actual software business. It also doesn't account for things like future share dilution or changes to the company's debt. And of course, it has no way of predicting major regulatory risks. These are all real-world things that would absolutely affect the stock price.
All right, so we ran the numbers, we talked about the caveats. What's the bottom line here? What should you really take away from all this?
The big takeaway is this. These numbers are not predictions. They are not a crystal ball. They are designed to show one thing, and one thing very clearly, just how direct and powerful the link is between the price of Bitcoin and the potential valuation of MicroStrategy. It is a leveraged bet on Bitcoin, plain and simple.
And all of this really leaves us with one big, fascinating question to think about. Is what MicroStrategy is doing, turning a public company into essentially a leveraged bet on a single, super volatile asset, is that the future of corporate strategy, or is it a concentration of risk unlike anything we've ever really seen before? I guess the answer to that is something we'll all find out in the years to come.